what you grew up listening to will really determine how you view this.
Our clients that were slow to make change were the ones that actually bled longer. The guests at a luxury villa, they're very different. They're actually patient. They're easier to deal with, better to communicate with, but they're also very sophisticated, very smart, and they expect a different level of concierge.
What is going on, STR Nation? This is your host and brother from another mother, Emmanuel Pani. I am here by myself again today and welcoming Fouad Badzi to the show. I had the pleasure of meeting Fouad in Denver at Joy's conference. He was one of the MCs, and we hit it off right away. He has 95 properties across multiple states. He got started in 2019, built up his portfolio to about 8 to 9, and then joined forces with somebody else. And now they've built up their properties to 95 listings. He does luxury and comfort. And so it was a wide-ranging conversation about all of the lessons. And he comes from a background of consulting for banking. And so he brought a very interesting perspective of the lessons that he got from the banking industry that he then applied to the STR side. And we also got to talk about just the struggles, the thinking big, right? This is a topic that we brought up last week with Marcus Rader, and I found it here again, the idea of why do you get to build this business to be the biggest you possibly can, and how actually thinking like that, it's going to help you short term in creating the right business that gets you the right amount of freedom. Because again, thinking too small most of the time will get you back into a job, right? Like owning a business that you work in and not on. And so great conversation, deeply enjoyed myself. And so without further ado, I welcome Fouad Badzi to the show.
How you doing, Nee?
Brother, so good to see you again. I had the pleasure of meeting you out in Denver. You were MCing Jody's event in Denver. You did a great job.
Thank you.
And we had a chance to chat briefly. And I was like, dude, I like your vibe. Like, what are you all about? You're like, dude, I have 95 listings across multiple states. I'm a dad. We connected on family food, right? Like, I'm European. You're Lebanese, which is kind of European for those of us that understand and know, right? We're the same thing, right? We just cook slightly different, but at the same time, we value the same things.
Yep.
I was like, dude, we got to have you on the show. So I'm super excited that you're here with me today.
By the way, I've known about you for a long time and big fan and excited to add value. So thanks for having me on.
Yeah, man. So I know your story, right? Like you used to have a very high level, busy job before, and then you got into this, and now you got 95 listings. Some are luxury, some are just things. So kind of tell us how you have become you. Like, tell me your story.
Yeah. So grew up in the banking industry, 20 years in banking. The last 11 of that, I got to travel around the country and consult community banks that were 50 billion in assets and less. And it was a fun time. It was great. Learned from the best and then got to add value. I had probably what I would call probably the most fun job in banking. 80% of my time was spent on golf courses and in sports stadiums with the C-suite of banks, just really talking to them about their inefficiencies and how we could help and add value to them. And, long story short, did that for 11 years. And my wife, who is an attorney, her practice really blew up. She started in 2012. It really blew up 2017. Our goals, we had family goals, and the goal was basically once we get debt free and her income outpaces mine, I could leave corporate and then kind of become a little bit more entrepreneurial. So 2017, her income outpaced mine. We got debt free, paid off all of our student loans, paid off our mortgage, did just were totally debt free. It was a really good time. We had 2 boys at the time. And so 2018, I go into my boss and I say, hey, I'm going to leave. And, I don't want to travel as much as I'm traveling 12 weeks out of the year. I just really want to be at home. And it gave me really cool projects, a retention bonus, a promotion, all that. And it was like, okay, cool, I'll stay. Right. So then 2019 comes along, having the same feelings. So I went to him in January and I said, listen, this time is for real. I got to go. August 12th will be my last day. I gave him a 7-month notice. I loved my job. I loved my relationships, loved everything about what I was doing. And I said, let me help you. Let me hire my successor. Let me take that person around the country, train them, but just move everything over the right way. In the meantime, I started a coffee shop with a kids play place in the back. It's called Detroit Kid City. I live in Detroit. And And so that was really cool. The idea was I would transition out and then get to really start hosting a lot of field trips, birthday parties, private events, and all that, and have my kids just running around the place with us. And I started deploying our capital into long-term rentals, which I really hated, and I wasn't a very good long-term. I wasn't the guy that would just let people stay for free if they wouldn't make payments. So my daughter was born early 2019. She turns 1 in 2020, and then we find out she's severely allergic to tree nuts. The best food allergist in the world is in Los Angeles, California, Long Beach, to be specific. And he said, and so we get her down there for an appointment, and it's a very exclusive program, very difficult to get into. But because COVID was just starting, people were canceling, and so we got lucky. We got moved up on the waiting list. Brings her down, draws her blood work, and then he customizes a plan based on what her blood work is. How do we treat her? And so her plan was for 3 years, we're going to have to be there in Los Angeles every 6 weeks from Detroit. I'm a banker. I'm a finance guy. I start running the numbers. I'm like, this is going to cost us a lot of money just renting a place. And so bought a short-term rental, sold all the long-term rentals, sold, coffee shop. We closed it because of COVID. And then, but I said, if I'm going to buy one, if I'm going into this industry, I'm just going to go big, right? So bought two in Scottsdale. And then, so we had three right off rip, one in Huntington Beach, two in Scottsdale. Started going down for her appointments, really fell in love with the industry, started raising capital so that we wouldn't run out of money. And, we built it up to like 9 properties, started, going back on my consulting skill set from the banking days, started consulting in this space, right? And not just coaching, right? Not just teaching people how to get in. I was really consulting already existing operators on how to scale their business, how to find efficiencies, and how to identify gaps in their business, and where they could, whether it was capital that they needed, whether it was tax benefits that they needed to find, whatever it was. And so then one of my consulting clients, built a great relationship with her, acquired her management company. She had 60 listings. This was about 8 months ago, and brought her in. And so we went from my 9 and her 60. And every month since then, we've gained about 3 to 5 listings. We're up to 96 now, I think is a number as of this morning is 96. So that's where we're at. I've always focused on luxury villas, and she had what I would call comfort stays, kind of less desirable vacation, not vacation markets, more like corporate stays. So we're actually rebranding everything as we speak. That should be done within about a week. And then we're going to have 2 different booking channels, one for our luxury vertical and one for our comfort stays. But our goal will be scaling the luxury side moving forward.
Amazing. I love that. And I remember us talking in Denver and me asking the specific question to you, right? So with the 2 verticals, most people would assume that you have the same team running them. And you told me, actually, no, they're separate tech stack, they're separate teams, they're separate everything else. What was the thinking behind that decision?
So great question. Actually, I love this because we've gone back and forth on it. And what was happening was, look, the guests are different, right? The guests at a luxury villa, they're very different. They're actually patient. They're easier to deal with, better to communicate with, but they're also very sophisticated, very smart, and they expect a different level of concierge. They don't expect perfection. They expect somebody that understands how to forward think and say things like, hey, I don't have an answer for you, but I'm on it. Hey, I know it's going to take us a couple hours, but we're going to be there. Hey, and just setting expectations. Somebody that's just really, really, consultative or concierge in their approach. On the other side of that, the comfort stays, these are way more affordable stays. These are people that are a little bit more cost, more cost aware. And so, so things mattered, perfection mattered. And, it was very difficult, and we would get, everything, they would report everything, and they would really take a lot of hand holding, and they didn't know how to use this and do that and turn that on. And so it takes a different skill set to work with that clientele than it does to work with this other clientele. And what we found was people were getting confused in who they were talking to. So we just kind of separated our teams. We said, hey, you guys work over here. You guys work over here. You're more hospitable, so be over here. You're more technical, so work over here. And then we just identified the right tech stack for each brand, which we actually did land on the same tech stack, right? So, but we researched going separate tech stacks to see if there were any benefits to separating them out. And we did just land on the idea that no, I think one tech stack will work, and we'll be able to keep everything together. So that'll work.
Yeah. So when it comes to analyzing the tech stack, I love the fact that, again, it works for both things. Again, to me, the answer is the old question. that people ask when they start. What's the best PMS? I'm like, it's whatever works for you, really, right? Like, it's not the answer that you want, but it's the truth. What I'm curious to know is between the two sides of the portfolio, have you guys identified anything that tech stack wise belongs on the luxury side and not on the comfort side because it helps you deliver that higher quality service that the luxury side expects? Or it's just exactly the same tech stack?
Yeah, it came down to it's exactly the same. I got advice from a lot of people. I'm a big seeker of experience, right? Like tell me about, not just from the companies, right? But like, what do you use? Hey, Stacy St. John, what do you use? Whoever I can talk to, what do you use? And what it all came down to at the end of the day for us was, what does the direct booking site look like? Because that's the only site that the customer is actually going to see. So that was one. And then the other side of it was, what about the owners? What are the owners going to see, right? The people that we're managing their properties for, what are they going to see? And so we're using the third-party software for owner financial reporting. So that also kind of became agnostic to the PMS. So it came down to just let's look. One of the things I've always been strong about is I'm quick to make change. I'm actually very quick to make change. I think it's important. What I found in my consulting days was, the clients that were slow to make change were the ones that actually bled longer, and it was harder to overhaul later. But the faster you make change, the faster you identify something is not working for me, make the change. It's okay. If you just implemented it a month ago, it's okay. You're not going to remember it in 6 months. Just get rid of it and keep moving. But what I learned in that is that because I'm such a fast changer, not everybody is. And I was putting a lot of stress on my team in this. And so what I just learned, and I committed to them about 2 weeks ago, was we are landing on this tech stack that we have. And I promise you, unless some big tidal wave comes in and some big change happens in the industry, my commitment to you is that I will give you 12 months without change, right? Doesn't mean we won't add a bell or whistle here or there, but at the end of the day, we'll commit to this tech stack for 12 months. But that's the maximum I'll commit to, because I think it's irresponsible to say I'd go any longer than that and say, okay, do we at least need to review this and say, have we outgrown what we do? Do we need something extra? Do we need something additional? But I will add to that, because I think PMSs are not perfect, right? There's not a single one that's perfect. I think what's important is that owners, especially if you're looking at scale, are creating your own CRM and your own database, so that if you ever do make a transition, you make sure that nothing is lost. And so we're actually in the process. And again, we're about a week away from this being completely done. We're building out our whole own database and CRM in Go High Level. And so we'll use Go High Level to also do our retargeting campaigns, our surveys, our reviews, our follow-ups, just all of our retention, everything that goes along with this business will go through Go High Level. And then even like our company site, when you go to our new company site, it'll be through Go High Level. And when you want to actually book a stay, it'll be very tailored to owners. But when you want to book a stay with us, you'll click on the link that says book a comfort stay or book a luxury villa stay, and it'll go back to our PMS direct booking site. So we're building 2 booking sites in our PMS, for one for each of those brands.
Yeah, that's awesome. So, but I did hear that the effort moving forward is going to be more on the luxury side of things versus the comfort state.
Yeah, exactly.
Last week, I had the pleasure of having Marcus Rader from Hostaway on the show. And what we talked about was how he suggested, because my question was like, hey, how do you help medium to small side businesses? What would you focus on? And to kind of boil it down quickly, what his response was, don't, right? Like, go bigger. Because if you're going to do a small to medium sized business, the level of stress for the level of reward doesn't make sense. You coming from a banking background where you understand the bigger and the compounding, you're kind of saying the same thing, right? You didn't go from like, the goal wasn't from like 9 to 15, 15 to 25, 25 to 30. You went 9 to 60 to 95. So if we have somebody listening now, they're in the beginning stage, maybe they're in that sweet spot, right? They're 5 to 10. Because I think 5 to 10, what's my truth is that you have the confidence that you're starting to do a couple of things. So logistically, you're like, okay, I can do this. You can see the scale. But for those people that they're like, I want to go luxury, but I don't have luxury. But Fouad, I agree with you. Like, luxury is the way to go. That makes a lot more sense. What would you tell them to focus on? Like, how do you wrap your head around being a luxury host when maybe you get a comfort host, but you understand the scalability and the business is really in 20, 30, 40 luxury villas over 150 kind of comfort homes.
Yeah, I love that. And I'll start actually by telling a little story. The last 4 years that I was in banking, these were like the last 4 years that, or not the last four, but these 4 years, over regulation in the banking industry really spiked, and it was making the cost of running a bank much higher. And so what you started to see, and we consulted a lot of the banks and we funded a lot of these merger and acquisitions, but they were more mergers than they were acquisitions. And so what was happening was, rather than big bank buying little bank, it was two banks of equal size saying, hey, let's do a merger of equals. And the reason they would do that is they would basically say, hey, look, I'm a $30 million or billion-dollar bank, you're a $30 billion bank, we both have the same cost structure, we both have the same revenue. If we joined, we double our revenue, but we get rid of our HR department. One of us gets rid of the HR department. One of us gets rid of marketing. One of us gets, right? So we take all those non-revenue generating departments and we just condense them. So our costs cut in half together, but our revenue doubles. And so mergers of equals was a big deal. And the point of that was, to your point, scale, right? Like there's no glory in just being in the middle ground, because your cost eventually just flatlines. Now, you might eventually, you'll take on a couple extra bucks per listing on your PMS for each additional unit that you bring on, right? But the revenue is going to way outweigh it. There will be no more like grand costs added to the equation. Or, every 35 or 50 listings, depending on your brand, you may need to add another VA, but that's very small and marginal in adding costs when you think about how quickly you can actually scale this business, right? So I totally agree with that. We've chosen luxury because, simply, again, guests are way easier to deal with. They're more fun to deal with. The homes, a large home and a small home, both take about the same amount of time. If anything, the smaller home actually probably takes a little bit more time in a lot of cases because of the tenants that you're working with. So that's why we've found that. What also, let's not forget, for decades, right? People have told us why they like vacations: mountains, oceans, camping. Like, these are the three top reasons people actually, and that'll never change. That will never, ever change. COVID changed that for like a year and a half. But as soon as people could fly again, what happened? Broken Bow, Oklahoma went to hell. And then everybody was going back to the Caribbean and back to the ocean and back to wherever they could go, right? So, I think it's important to focus on those luxury markets that, these are, from a vacation and a visitation perspective, they're economy proof, right? And we know that they're just desirable homes. So we're always going to be able to, at very least, keep our occupancy rate up, even if it means sometimes we have to bring our ADR down a little bit. Our occupancy can stay the same because we're still a desirable property and we can pull levers to make sure that we get some revenue in the door. So I think that's really important. So the way we're playing that now as we scale, we won't open a new market for comfort stays. We'll open a new market in our portfolio for luxury stays. And if we go to a new market, then we'll take comfort stays as they come along with it, as long as we're open because of but luxury has to be a leader. If we're not in a market with luxury properties, we'll pull out of that market and we won't take anything different, right? And we won't market to the comfort stays. They'll come to us, and they are coming to us. Right now we do zero paid advertising, we do zero paid marketing, none of that. And we're averaging about 3 to 5 units of growth per month. I would say we're still heavier. We're probably 60% of our growth is on the comfort side, but I actually even thought about selling that side of the business, but then I said, it's profitable. It's paying for all of our expenses across both units, both verticals. So it doesn't make sense to sell a profitable business right now for us. It's just not the time. There might be a day, but today's not the day.
Yeah, I love that. And so, where do you think your extensive experience in the banking industry helped you here? Like, how much different would your business be if you didn't work with C-suite executive of because $50 billion bank, you're already dealing with people that are thinking in a certain way. So give us some of the maybe ways of thinking from the banking world that you would say, okay, if I was to put something behind me on this wall of the lessons, give me like 2 of those lessons that you're like, this really made a difference for me.
Yeah, I love that. Well, think, first, with that, what I will say is, math is the only language in business, right? And so when you understand numbers and you understand financing, it makes you play at a completely different level. And you realize that actually the bigger you go, the easier it is. And so what does that mean? Banks have one job, and it's to lend money out. That's how they make money. So converse to what people think, like, deposits don't actually make them money. They're just holding cash so that they can lend it out. The banks in America work on a fractional banking system, which means for every dollar that they take in, they can lend out $10. And so what the banks want are bankable companies so that they can lend you money. So they actually, if you ever get declined for a loan, just know that they don't do that out of excitement. They really want to lend you money. They want to find a reason to lend you money. And so what I learned was position your balance sheet, position everything that goes along with your business in a way that's bankable, and build your business to sell it. And so even if you decide not to sell it in the future, that's okay. But if you build it with intentionality to sell it, you're going to build it right with a financial statement, all the ones that you need, right? Balance sheet, profit and loss, cash flow projections, all of it. These are things that you give your banker, and you fill out your personal financial statement all the time. I update mine every month. And so you wrap this up as a package and you deliver it to a banker, and you start building relationships. And you do this even before you need capital, so that when it's time for you to go and draw that capital, you've got the relationships, they've vetted you, they know you, they have your whole financial package. And it's like, oh, we know this guy and we can lend him money, right? So what I would say, what I learned quickly out of the banking industry is understand the numbers in your business more than you understand anything else, right? If you have to tell a story about your short-term rentals, if you have to sell it with cuteness and bells and whistles and nuts and bolts and all this other stuff, you're really trying to tell yourself a story. At the end of the day, how much revenue did you make? What were your costs? And what's your ROI? And we even use all of this in our strategy, in our pricing strategy, right? Like most people, they price against the market. They use dynamic pricing to price against the market. Well, the market went up, and so we're doing this and that. That's why we're setting our base and our minimums and it's like, I don't do any of that. What we do is we talk to our owners. They bring us a property. So what's your break even number? And we build everything based on their break even number, because we take break even plus 20%. Now we know what's going to make our owner happy. If we can return 20% to them every single month, we know who's going to be happy. Them. They're not going to know what the market is doing. They're not going to know any of that. They're trusting us to make sure that we cover all their costs. They never have to put a dollar out of their pocket, and that they make some sort of a return, right? So we price based on each of our owners' break-even number. So, and I got this out of the banking industry, right? It's if you price against the market, you're going to miss opportunities. Like in Phoenix a couple of years ago when the Super Bowl came, we had so many people holding the bag till the end, saying 2 weeks before the game, we're going to know who the two final teams are, and then we're going to go market to those teams. Well, guess what? By then, most people, because the Super Bowl, like 93% of attendees in the Super Bowl are not actually fans. They're actually like corporate sponsors and things of that nature. They already have their tickets. They booked 6 months ago. They booked 4 months ago. So we were really smart. We booked them really early, and we booked them at triple our usual rate. People were hoping to get 5-6 the rate, and they did it. And, so ultimately the point is, don't price against the market, price against each of your property's ROI needs. And then you understand, but these are the two lessons that I would tell you. Be bankable. So build to sell, even if you're not going to sell, be bankable and build your financials the right way. Use your bookkeepers, use your CPAs, talk to them frequently. Take your numbers side as serious as you do your listing descriptions and your photo setup and all of that. The numbers have to matter. They have to matter so much. And then price against your ROI, not against the market.
I love that. So as a banker, what are napkin math? Because I assume, like, right, you have also developed the habit and skill of being able to look through businesses and quickly, again, right, seeing beyond the cuteness and the bells and whistles. I mean, like, you get in and you're like, are scanning this document, this proposal for, let's say, 3 or 4 KPIs. Like, what are you looking for? Like, when you say be bankable, right?
Yep.
What are the things that people should focus on to be bankable, which are in
top line revenue and profit are your two most important things. What's your debt to income ratio is really important, both as a company and as a person. And obviously your credit score matters so much, right? So these are the things. If you always have your thumb on these, you're really you're gonna drive. If you see your gross revenue is driving in the right direction, your profitability may not always increase along with your gross revenue, If your gross revenue is going up and your profitability is staying somewhat parallel and the same, then you're in good shape, right? Because you're going to incur a little bit of cost. Again, you bring out a new listing, you have to, put it on dynamic pricing tools or whatever other softwares you have. So you're going to increase a little bit of cost. And so until you get a couple months of revenue, you might actually not show any profit yet. So, but your gross revenue has to go up. It has to go up. Your expenses have to maintain, and then and your credit score. Always make sure that you're making payments on time and keeping on top of your credit and doing those things right.
Yeah, I love that. So now looking at the future, right? So since 2019, when the journey kind of started for you guys, you have grown exponentially. So what does the next 5 years hold for you guys?
Yeah. So we're definitely building. We want to scale. The goal is to get to a minimum of 12 million in booked annual revenue every year. Reverse math on that, 12 million at a 15% margin will bring us down to about 1.75 million in profits. And if you can make an exit there, based on today's private equity conversations, you should be able to make an exit there at about 6 times EBITDA. But the goal will be at that point, if we get to a point where we can make an exit, we're going to use all of the people that have come through our STR cohort to go to them. We'll know how we've helped them scale, how we have helped them clean up their sheets and their balance sheets and all of that. And we'll say, hey, who wants to roll up and put their balance sheet with us? And let's go make an exit at X or 14X, because we're all going to combine our balance sheets, right? So there's always a number. And so one of the things that I like to do is every quarter, I like to talk to people in private equity that actually sell short-term rental companies. And I do this in advance, right? I know that I'm 3 to 5 years away from making the exit, but if I'm always staying in tune with what the market is doing and what the current sales are at, then we know that we can continue to build towards what's a desirable company. Again, will I ever sell it? I don't know. My boys are 10 and 9. I really don't want them to go to college, unless they have a burning desire to go do something. But my goal would be for them to take this company over and make it even better than I did, right? So I'm building to sell, but we'll see if we do.
Yeah, I love that. So it's funny because I had a conversation with somebody this morning. I'm actually going to send them this podcast once it airs
Cool.
for this specific question, right? Is like, he has a great business, like in the 70s, 80s. And I'm like, where are you going to next? I want to be the number one in this market. I'm like, amazing. What's after that? And I kind of introduced to him this similar concept of what you talked about just now. And his response was, I don't see myself not working. And I find that answer interesting because for me, once the exit happens, I assume that Fouad is not going back to Lebanon and just hanging out on the beach.
Yep.
I just know who you are.
No, that's right. That's exactly right.
So how do you help? Because for me, it also then creates a limitation on how hard you're going to push. Because if you already say you don't want the grape, right? Like you don't want to jump up to get the sweet, you're not going to try.
Yep.
And then that in that way, you're also going to limit yourself along the way. Does that make sense?
It does. It makes
And
perfect sense.
how do you think about that? Like, how do you think about, hey, I am going to continue to push myself to think as big as I possibly can, even though I don't necessarily know what comes next. So that comfortably uncomfortable in the growth. Because also, like, right, you have the 3 kids, and I know they're really important to you, and you guys spend a lot of time together.
We do.
So how do you balance those 2 things?
So it everybody's different, right? And so you came in late, so you didn't get to see my presentation, my actual talk at the conference
No, I missed
in Denver. So one of the things that I did, one of the things I'm against is, and one of the reason I actually brought my consulting skills into this industry is I see too many people that are trying to consult or coach people to do it this way. And it's like, but that doesn't align with that person's goals, right? So one of the way I consult is I consult based on somebody's goals. I don't do it based on my blueprint. And so I'll teach anybody what I did. I don't mind that. But at the end of the day, I have to know your goals in order to help you get to where you want to go, right? For me, I'll tell you what that looks like. You're right. I will never want to stop working. But it's different in that you get to choose differently. You get to think differently about what you want to do and how do you create impact. I coach my kids' AAU basketball team, a very competitive travel basketball team, and they're only 10 and 9. So that's going to last at least another 8 years.
100%.
But one of the things that I do intentionally is I get myself around people that have already made big exits. One of my good friends just made $100 million exit on a roofing company, and just having conversations with him right now about how he has started to position his life. person that drives like that doesn't just stop. You're right. It's like, what's next? And so just starting to think about all the different ways that he's positioning his capital, the deals that he's getting involved in, being involved very high level on boards and being involved just strategically in the deals that he's investing. That's really exciting for me. I will absolutely at some point in my life, I've always said when I make an exit, my last rodeo will always be about the way that society feeds and the way our thought processes around food and children. I think we have that's to me the real pandemic is just the way that food is marketed to kids, and the way unfortunately parents just kind of follow that and just go down society, and that's why we have childhood obesity and all this. So I'm going to go that route. I'll probably fight it via a lot of content and a lot of that, but also via having a big real estate flex space that'll have multiple basketball courts, pickleball courts, soccer fields, all that. And I'll get to coach my kids in that place. And I say that because at the end of the day, if you do make an exit, if you do make a sale, you've got a tax problem. And so you've got to make sure that real estate comes along with that hand in hand. Like, I don't actually enjoy real estate, right? I use real estate because we have to, because it builds wealth and because it makes sure that we don't pay taxes again. We haven't paid taxes in a few years. We'll never will again, because now we've kind of cracked that code. So I don't enjoy real estate. I enjoy the business side of it. But real estate will always have to be a part of that, right? That's the way I think. And I definitely think that there's a way to continue to elevate what we do and create more impact. I love the STR cohort and what we're doing there, and I love making an impact on people's business. So that's always going to withstand. But look, I mean, I was actually at a mastermind last week where our mentor, he told us and he reminded us, he said, word for word, I do not get into a single business without the objective of exiting. And the reason for that is, our ego drives us. If you're really doing it, we always say, well, we work so hard for our kids. It's like, all your kids really want is more time with you. I work so hard for my family. Well, your family wants more time with you, right? Like, I mean, that's all they really want. They don't give a shit how much you work. That's for you. So it's okay to be honest. And it's okay to say, I'm working really hard for me because I love it and I'm an egomaniac and I love to do all this stuff, right? But at the end of the day, you're not doing it for anybody else. You're doing it for you. And so if the goal is for the family, then as financial stewards and to be the fiduciaries that we are to our families, then it's incumbent on us to say, okay, what makes the most sense financially today? It can't be emotional. What makes the most sense financially? And that means we have to exit here. I mean, look, at the end of the day, we know that we can go into real estate funds. We can take $1 million, find all kinds of reputable real estate REITs, put it in there and get 12% all day long, right? We know that. So if you're running a business, you better be making like 18, 20% or higher, because if you're not, then what's the point in putting in all this time just to get the same 12% that you can get passively at 12%, invested? So you have to think about your ROT, your return on time. It's a big one and it's a big deal to me. And I think that's really important. And I think that's where people sometimes kind of burn out and lose the ability to function efficiently, is because they've lost their ROT, and that will eventually lose that energy, that passion, and that drive. So yeah, send it to him and feel free to connect us too, because I'll try to help that person understand. Exiting doesn't mean you quit. Exiting just means you get new beginnings. And we're human. We're humans, but we're animals. And animals have run in the wild. I mean, we love change. We are creatures of change, and that's a good thing. That keeps us young. So, yeah.
It's so funny because, again, it goes your paradigm, like what you grew up listening to, will really determine how you view this. And so for me, hearing somebody that's like, we're creatures of change, when then, dude, audit your own circle. Is this the philosophy of your circle? It's fear, and the embracing of fear is that the philosophy of your circle, right? Because I had this conversation with somebody yesterday too, where they're like, we've been doing this for a year and it's very up and down. I'm like, yeah. Well, you want to tell me that you want entrepreneurship, you want the excitement, and you want it to be consistent the entire fucking time? That's not
Not gonna happen.
right. That's not what the game is. And at the same time, happiness comes from freedom, and freedom comes from courage, right? Like, if there is no courage, what, right? What are we doing? So, brother, I deeply enjoyed our conversation. I want to be respectful of your time. For people that want to connect with you and just hear more about you and be around your circle, where can people find out more about you?
Yeah, I love that. Thank you for that. Feel free to go to my website, fouadbazi.com. You can also just find me on Instagram, Fouad_Airbnb. Fouad is Fouad. So always connect. There's a link in my bio to Calendly. Always, feel free to schedule some time with me and chat. And yeah, just love to connect, love to meet people in the industry, and let me know if I can help.
Awesome, brother. And then the last question we ask everybody is, what is your number one secret to success with short-term rentals?
Do it your way. Build it around your goals. Don't do it because you saw some guy on Instagram do it that way. Don't do it because you saw another person on Instagram do it that way. Make sure that you start with the end in mind, reverse engineer it, understand where you're going, and drive towards your own goals, for sure.
I love that. I love it. Well, this was so much fun. I do know that it's going to be super valuable for our listeners, and I'll catch you guys on the next show. Ciao.
Appreciate you, brother. Thank you.